Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. This is your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, Mike Becker is on assignment. So Mike, unfortunately, is closing a couple transactions today and could not join us. But in the podcast today, we have Sven and we also have Angel. And they recently purchased a property called Hacienda Serena. It's a property over in Irving, Texas, which is kind of middle of Dallas, right east of the big DFW airport in Dallas. So they're in the podcast. We're going to talk with them a little bit and just kind of understand a little bit about how they did some of their own stuff separately. And then they also came together to form a partnership and bought Hacienda Serena together. So again, I'm going to welcome Sven and Angel. Thanks, guys, for coming in.
Hello, Paul. Thanks for having us here.
No problem.
Thank you, Paul.
So let's start off with Sven. And now you'll understand when you listen to Sven a little bit that Sven is from far east, northeast Texas. So Sven, exactly where were you from?
I'm actually from Germany.
Germany?
Yes. And I came here to the U.S. in 91. And
in fact, you're in Texas longer than I've been in Texas. So I actually call you a native almost of Texas.
Yeah, my Texas accent is probably coming through here right now. But,
It certainly is. And Sven is married to Rebecca, and they're not in the multifamily business 100%, but they're trying to get there in the 100% way. They're actually in the printing business. And why did you get into the multifamily business, Sven?
Well, we decided, the printing industry in the past 10 years really takes a direction where it's really without a future in the way we want like to have a future financially. And the responsibility in running a company in that industry, which we have done successfully for the past 20 years, would mean for us extensive traveling for me and continuous involvement in a measure we were not willing to do anymore. And we had some experience in single-family rentals, and we wanted to educate ourselves and proceed that way in investing our money in real estate, in multifamily.
So how did you get into multifamily? Did you guys go through kind of a mentorship group that kind of taught you how to learn about in the matrix of multifamily and some of the dynamics of multifamily ownership? How did you come to it?
Yes, Rebecca and I, we're a close team in our business, in our printing business. We're not printing, we're actually servicing and selling commercial printing equipment in the commercial industry. And so we have experience in running a business for a long time. But and we had some single-family rental homes, but needed to educate ourselves. We were looking around and were recommended to actually Lifestyles Unlimited. Mm-hmm. We were looking for somebody to mentor us, to educate us in order to to achieve our goals and speed that up, our education. So we went actually to Lifestyles, participated on their first course and heard about multifamily there and learned about multifamily. And we immediately decided to go with multifamily instead of investing in single-family rentals.
Okay, so you went to an educational workshop called Lifestyles Unlimited. Mm-hmm. They're not participants into the transaction; they're just educators that kind of tell you, from the alpha to the omega, how ownership happens. And Angel, is that how you got into the multifamily business? And really, what's your background?
Well, my background is in chemical sales. I sell chemicals for a large company here in the Dallas-Fort Worth area. Mm-hmm. And the reason I got into real estate in general was because I read a book, like many other people, that inspired me. It was a book by Robert Kiyosaki. And it inspired me to start investing in real estate. And so that I started doing that with single-family homes. And over the 2-year time span before I got into multifamily, I purchased multiple homes, a duplex and a fourplex, and eventually I decided that the maintenance and the upkeep of trying to maintain all those homes and different properties was just too much. and decided to go to a meetup group where I met a mentor that inspired me to go to multifamily and told me all the benefits of why multifamily was the way to go. I completely believed him. And here we are. Bought 2 multifamily properties, an 11-unit apartment complex and a 38-unit apartment complex right next to each other, within a block from each other. And I'm in a group where there's lots of people that have the same interest, and we all synergize and get together and create ideas with each other, and then that's where I met Sven.
All right, let's start, Sven, with a little bit of your background and what you did on the multifamily side. Tell us a little bit about the first multifamily transaction that you got into, and what kind of was your role in that one?
Yeah, we're actually what we call a deal sponsor, and it was a very exciting transaction for our first transaction. It's a 41-unit apartment complex here in Dallas, near Uptown in the Oak Lawn area. The owner who owned it previously actually was part of the same mentorship group. So we were actually able, with Paul's help, to with our first transaction, to get a non-recourse loan on this purchase.
Yeah, that's highly unusual, but
Highly unusual, yeah,
Yes.
but very exciting for us. Yeah,
yeah. So the property that they bought, this 41-unit property, was built in 1964.
yeah, 960, something like that. Yeah, 3. Yeah.
So the property has a flat roof, but it's a very vintage-looking property in the Oak Lawn, Turtle Creek area. The property is in an up-and-coming area. I would actually say that the property is probably a B-, C+ property, but it's in a neighborhood that's changing into maybe an A- A area. So it's called the Uptown area, or close to the Uptown area in Oak Lawn. And as he said, Sven said, is that it was purchased by a seller that sold the property. Had owned it for a couple of years. That person made some money, and then Sven bought it. How long ago was it, Sven? Did you buy it?
About 14 months now, something like that.
So he was able with his. He also
Yeah, June of last year we closed. June 26th last year.
now you also had another transaction. You were a passive partner in.
Yes, we have multiple other transactions. We're passive investors or key principal. Another 50-unit in Garland with Andrew Patton. That was our first one. We actually invested passively or as a key principal.
Yeah.
And then we're actually investors in Angel's property as well as passive investors.
Right. So the first transaction really that Sven bought was a property called Casabella.
Yes,
Is it-
Casabella. Yes.
Okay, that's a 50-unit over in Garland. Did you go in and you signed the note?
Yes.
Okay, so the first transaction that Sven participated in, he's participated in as a guarantor. And so he signed. It was a recourse transaction, so it was a bank transaction. I'm going to make this up. I think it was like a 25-year amortization with maybe a 5-year term or so.
5-year term.
Yeah, it's whatever it was. So it was a very good loan, great interest rate. But what the point was is that he, on his first transaction, because he had no prior experience, he had to sign his, not only the collateral being the property, but also his personal balance sheet too. So that's how he got into it. And then we leveraged that experience on that one to go into the property over in the Oak Lawn area. So that's how he was able to, we put together the briefing to Fannie Mae that he had experience on similar size multifamily properties, and that helped him acquire the property in Oak Lawn.
Yes, there were many things that came together. Of course, you helping us to get the financing, and you knowing us, of course, from the previous property. Where
Sure.
we signed as key principal, our mentor, the group, where our mentor,
Definitely
where we
helped you.
learned, where we got educated, had a great impact on that as well. So everyone in our team was important in order to bring that to closure and make the successful closing.
Tell me a little bit about, from the period of time that you bought the properties to today, how much has your NOI gone up, and what's the reason why the NOI has gone up?
Our NOI has gone up from, Rebecca here have all the idea numbers, but our NOI, I think it's right now about 36,000, I think, a month. So it has increased from, I think it was from 24,000 or 26,000 when we took over. So tremendously
Yeah,
increased.
you guys have done a great job. In fact,
Yes.
what you did is you took the old name of the property that had been around for 30 years and you rebranded that property.
Yes.
Do you think the rebranding, which what's really meant is that you put a new name on the property, put new marketing materials in the property. Did that help at all?
Oh yes, our idea was to make this. It's an old property, an old building, and we wanted to make it match or fit in as best as possible to the A-class surrounding properties. Make it a modern, interesting property to young, educated professionals who are in this area who want to live there, and that's what we did. So
Yeah. Now, are you managing that property yourself?
yes, we're self-managing that property.
So we actually helped you 2 times because we got the non-recourse loan, but also too is we were able to have you have the ability to manage your own asset.
Right.
And so Fannie wasn't too crazy about you managing your own asset right out of the box. They were kind of trying to put the squeeze on us to make sure that you had a third-party property management, but you were able to convince Fannie that you were good to go to manage your own assets. So that was a great success on your part, because what that does is that keeps a little bit more of the money in your pocket and a little bit more control in your pocket. So that may not be the right thing for everybody, but it definitely was great for Rebecca and for Sven, because they are very hands-on people and they want to be able to find out exactly where all their money is going to and push rents up as much as they can. So anything more to add on that, on the Shelby property?
No, I mean, today Shelby is performing great. We're 100% occupied. We actually just closed our last lease for this year, and we're full all the way up into the next year. There's waiting lists for people who want to get in. And so we're just increasing rents and continuing increasing the value of our property.
Good for you guys. I mean, that's a success. Let's turn the table a little bit over to Angel. Angel, tell us, I mean, you did the single family side and you have a full-time job, and then your first multifamily property was how many doors?
11 units.
11 units, and that's in Irving, Texas, too. And so now this is a property that it's 11 units. Are they all 2 bedrooms?
They're all 2-bedroom townhome style apartments. So what that means is upstairs, downstairs, 2 bedrooms upstairs with a patio and a balcony upstairs.
All right. And when you bought the property, you did an acquisition with a rehab component to the deal.
Correct.
So what was in your rehab budget?
The rehab budget had extensive balcony repairs as well as foundation repairs and interior make-readies and solar screens. A lot of it was safety related because the city was putting violations on the property or was about to. And so we knew we had to take care of that. And some of it was bank required foundation repairs that needed to be done.
How many piers did you have to put into that property? I mean, piers are what goes underneath the property to level the property out.
I had to put about 52 piers around both buildings.
Wow. And so you've put 52 piers underneath the building. You kind of leveled the property out. You made the doors able to open up and the window jambs able to open up. And was there any repercussions by putting 52 piers in under the building?
Yeah, you always expect that there might be some windows breaking or some brick breaking. We actually had the drainage bust. It was probably already busted before we did any foundation work, but we found leaks in the piping when we were digging holes for the foundation piers to go in. So then we knew immediately that we had to fix that. And then a lot of residents were always complaining about their toilets not flushing. And so we, instead of having to keep continuing to do that maintenance, we knew that we had to fix the drainage.
Okay. So you buy the property, you do the repairs to the property. And now before you met Sven and Rebecca, or spending time with Sven and Rebecca, how were you managing 11 doors? Was that, since you didn't have a manager, were you the manager?
I was the manager. You know, the whole reason for me buying a small property was because I wanted to learn the mechanics of how to manage a property. The whole idea is not for me to be the manager of the property, but I wanted to learn at least how to do it so that when I hire a third-party management company and I oversee them, I can understand what their pitfalls may be, what they're running up against, how to hopefully manage them a little bit better. That way I can understand more of the picture rather than just coming in from it blind.
Did you take any third-party property management education like a CAMS or a CAPS class?
I joined the Texas Apartment Association meeting, or Texas Apartment Association group, and I went to as many meetings as I could, but I didn't take any formal training. I took a few landlord classes, learned how to fill out the rental application and the rental leases, but they were all workshop type classes, not a full-length accredited course.
Okay. So you meet Sven. I mean, you already knew Sven.
Sven's actually in our deal in the 11 unit. So when I joined the mentorship program and the group, in this group, we go out and tour properties. And this was one property that was on the tour, and it looked really attractive. Sven and I already knew each other at that point, and we started talking about it and said, hey, and Sven said that I really like that property. I'd go in that deal with you if you want to go into it. And that's how, and so he's one of the investors in that property. And in total, there's six or five other investors in that property with me. And
Sven, tell us a little bit about, I mean, we have lead investors, people that are general partners or managing members of the transaction. Then we have people that are kind of limited partners, or they kind of stand off and let the managing member handle the property. So tell me a little bit about, as a passive member, as a limited partner in Angel's transaction, what turns you on to that? How come you like that one versus, another one?
Because we have funds, we have to invest our IRA funds. We want to invest in multifamily investments, and so we are passive investors with that because we can be active investors in that, and so we're looking for opportunities to invest our IRA funds in passive investments.
What was critical? Was it Angel's character you thought was critical?
Yes.
Property itself?
There are probably three things which are critical for us. Of course, one is the person who's going to be the deal sponsors, the leading person in that deal, who is purchasing that deal.
Sure.
And that's very important for us to pick the right person who's doing that. And Angel has a great personality. He's a very calm person, thinks things through. And I like him. We really like the way he does things, the way he thinks. And he has a great family, his wife we met. And the next thing, of course, is our criteria in investing passively, what we're looking for our returns, and that's the next thing. And then we're looking at the property itself. If we like the property and if all those things come together, then we'll pull the trigger usually.
Yeah, the property definitely is important, and the rates of return are definitely important, but I think it all comes down to the character of the person that's leading the multifamily transaction. Yes. And you kind of want to know a little bit more about them, whether it is their personal financial statement that they can share with you, or their credit or criminal background, and kind of vet people out that maybe have done business with that person before, to kind of figure out, whether that this is the right direction for all of us to go. So, it sounds like you kind of did your third-party due diligence, not only on the property, but also on Angel in that transaction. So you guys were already partners prior to buying Hacienda Serena. So let's kind of talk a little bit about Hacienda Serena, because you just closed that transaction not too terribly long ago, probably about a
little over a month ago.
A little bit over a month ago. Right. So let's kind of walk through it. The property was listed for sale, and there was some people that were looking to make offers on it. How did you guys come to the table and make an offer on that deal?
Well, if we start back a little bit, it was really the idea that Rebecca came up with, that we were looking really to hire a full-time staff in our property management company.
And again, Rebecca is Sven's wife.
Yes, my wife.
And
she can't be here today, and part owner. And so we were looking at hiring full-time management employees, property manager, and we already have a maintenance staff, and utilize this. And because we feel like we get better qualified personnel if we have enough units available to support this personnel.
Right.
So the idea was maybe to add another unit as a certain size to come up maybe with 90 units total, that including our 41 units, 11 units from Angel's Villa Casita, plus another unit, and there came Hacienda Serena with 38 units.
Right.
Okay, which was perfect for that. So we said to Angel, what do you think? Is that something we want to do?
And so it was Angel that was the managing member.
Right. Well, since I owned 11 units right next door, it just made sense that we combine both these apartment complexes together to synergize and work those two together in the same location from the same office. When he came to me and told me about the idea, my whole idea was not to manage an 11-unit apartment complex for forever.
Sure.
So I wanted to eventually hire a third-party property management company as well, but it just didn't make sense for a small property. When you combine it with a 38 unit property, now it's almost 50 units where it almost makes sense where you can hire third
The
party
economies
management.
of scale start to make sense.
Correct. And so when Sven came to me and said, "Hey, are you interested in that property?" I said, "Well, I'm really looking for something a little bit bigger. I'm looking for 100 units or more. I wanted to get my feet wet on 11 units. I'm really looking for something more, but it does make sense."
Okay.
I thought I was the natural buyer for the property, and it just made sense.
I mean, I actually thought you were the natural buyer right from the beginning. This property was less than 100 feet away from your current property, and in a good section of South Irving. I mean, the whole deal made sense. I mean, so the seller had owned the property, put some significant cash into the property in the form of repairs to the interior of the property, the parking lot, and some of the other things in the property. So, and he had owned it for a couple years or so, and it was time for him to just kind of rotate into maybe something larger that he wanted to do. And so Sven, Rebecca, and Angel kind of put together a LOI, and you guys kind of negotiated that back and forth for a little bit, and your LOI was accepted.
Yeah, we were surprised. With the way the market is, we were expecting to get booted out because, our offer was quite a bit lower than everybody else's, or from what we understand. Not too much, but, it's sellers are always looking for the best price, but I think that we just had the strongest team, and we knew the seller. Not that probably made a whole lot of difference, but it just made sense overall.
And then tell me a little bit about, this is a very competitive market, so did you guys go hard with money right from the beginning, or did you go through your due diligence first, or your financing contingency first? Where did the seller get a comfort level with you guys with money going hard?
Right. In order for our offer to make sense to the seller, because our offer was lower, we put hard money up front from day one. There were some contingencies. The contingencies were that the environmental would come back clean.
Yep.
And a couple other contingencies, but
there was a gas station. There's a gas station right next to the
Yes,
property,
correct. Mm-hmm.
And there was a concern, but it was a fairly new gas station. And then we got the phase one back during the due diligence, and that came back as clean. There was no problems with any leaking tanks or any problems with any EPA issues, and so that was a relief for everybody.
right.
Which we didn't think there was going to be a problem, but there wasn't going to be a problem. So tell me about the next steps. You guys do an LOI, it's accepted. What happens next?
You hire somebody to come in and do the due diligence work along with us. We walk every unit to see what we're getting ourselves into.
Yep.
Come up with a repair budget, which we walk through and make sure that it still fits our plan. And we immediately, I think we started looking for property management person that we could hire that would make sense to put in that place. And started doing all the background work, gathering all the investors that were going to be in the deal, and just doing all that background work.
So I think from the LOI we went on the contract, of course, but it was more formality going on the contract because we had everything really lined out pretty much. It was really just a formality getting the contract signed and lined out with our attorney and this from the seller. From there we went straight into inspection, checked out the property.
And you guys hired a third-party inspection company?
Yes, we did.
Yes.
And do you think that was a good idea?
Oh, it's always a good idea.
It's kind
Don't do it without it.
Kind of a loaded question. I think that anytime that if you're not familiar with the property itself, that you're not on the property every day, seeing about what's going on, you need to hire a specialist, not just the residential inspector. You need to hire a multifamily inspector, kind of a general contractor that can kind of bring in all the trades, whether it's for the roof or for electrical system or the HVAC system, or anything that has to do with the property itself. Make sure they come in, they kind of walk every unit. You just don't want a sampling of the units. You want to see exactly what's going on, and you want to put everything in writing. And then if you can, if it makes sense that we want to retrade that number, then we have everything in writing that shows what needs to be done to the property. So
I can only say it doesn't matter if you know the seller or not. Do your due diligence. Hire a third party, get your inspection done, so you know what you're buying. Yeah.
Right. And I think the sweetest thing about this deal, at least for me, was that we were able to secure a non-recourse loan with it, and that's what really made sense. And I wouldn't have been able to do it by myself, and that's where Sven would come in and help me with that. And
why was that important to you to have a non-recourse loan for you?
For me, that's important because as a deal sponsor, When you're looking at these larger units, at these 100-plus units, those are non-recourse Fannie Mae or Freddie Mac type loans that loan on those types of properties. And if you don't have Fannie Mae or Freddie Mac experience, it's very hard for you to be a deal sponsor in those deals. And so that's why that was important to me.
It was important to you, Sven, too, to have
Yes, it's very important because all the
non-recourse loan.
future deals we're going to do, all for us, going to be non-recourse. And so that was under the criteria, having a non-recourse financing only. We went into this deal with that in mind as a goal. Yes.
So after the due diligence was done and that you decided that you would want to buy this property, you went under application with the lender, which was us, in the transaction on a multifamily non-recourse Freddie Mac loan. And what was the LTV on that transaction?
It was 80%.
So you had an 80% loan, so acquisition price. This one's a little bit different, is that Freddie Mac came out with a small balance program back about a year ago, and it had zero market share when they first opened it up, and now it has, 90% market share in the small balance. That's anywhere from $1 million up to a $5 million loan level. But it does not include rehab dollars into it. And so we got 80% leverage, but any of the rehab dollars was going to come out of our pocket, out of the equity to buy the property. So when we got the application going, we did the due diligence on the appraisal, we did the engineer's report, we did that phase one we talked about, any concerns about the gas station next door to the property, nothing, everything came back very good, no problems with that. And so now one of the things that I think you did like too, that this product has available to it, is that it does have a couple years of interest only. And was that a pretty good deal for you?
Oh, that makes it a fantastic deal. We got 3 years of interest only, which is really good for us.
Yeah. So having having 3 years interest only kind of juices the numbers up. It was a 30-year amortization with a 10-year term. And it was a 20-year term.
A 20-year term.
With a fixed rate of 10 years, and then it became adjustable. So we don't have a gun at the back of our head at the end of the 10th year to actually refinance it or sell the property. So that was a great loan.
It's an awesome loan. Yeah, I love that thing. I mean, it was great. I thought Shelby down Oakland was great, but that beat it by far.
Yeah, it really tweaked our rates of return in terms of the return on investment for people that had invested with you into the transaction. And then it gives us a couple of more years of, when the interest only goes away, gives a couple more years to kind of tweak our rents.
Right. That's what that does, really. It gives us time. Okay. It gives us time because right now we're buying for a premium some of the properties. Sure. It did cost a good penny, this property, and it gives us time to get the rents where we needed to have, to make the adjustments we need to make, and to get the income where we need to make it, and then to fluently switch over to full payments, after 3 years, paying interest and...
Yeah, so the loan was just one part of the transaction, but really you guys came kind of together as a team to manage the asset. So loan was approved, you guys closed on the transaction, and now Sven, you and Rebecca are managing the asset. Now you're not there on a full-time basis. You hired a manager that manages all the properties you guys own?
Yes, we started actually a management company when we bought the property in Dallas, in Oakland. So we hired, of course, a part-time office help, a property manager, and a full-time. Well, we started as a part-time maintenance, but we then decided we'll go hire a full-time maintenance person to get a good maintenance person, and he worked out very, very well. We had a lot of work to do at Shelby, which comes now to an end. All the rehab, all the work needed to be done at Shelby is completed.
Sure.
And so it was a great opportunity to say, let's hire also a full-time property manager to be in the office and share those 90 units, those properties, with the staff we have, and make full use out of their time and what we pay for that. And reduce costs on Shelby, of course, and bring actually office staff now to the property, which really didn't have an office staff on a regular base at Hacienda. Plus provide office staff to Villa Casita, which didn't have an office either, which Villa Casita is now run out of the office at Hacienda Serena. So it's great for the residents, it's great for us. It frees up time for Rebecca and myself to concentrate on our next purchase. And so it seems to be for us a great opportunity to do this.
Yeah, I think you guys took some baby steps and you wanted to learn how this whole thing was put together. You kind of built a template and how you want to go from, 11 units that Angel had and the 41 that Sven had with Rebecca. And now you have 38 units on the Irving property. Now you're going to probably do another 100 units, probably early part of next year. So, people can do it many different ways. I kind of like your approach of doing baby steps first and learning and having something to the core on what you are doing, and then trying to just start off out of the box with 150 doors and trying to push it over to a third-party management. You don't know if you're getting screwed or not. If you're not the manager on site, I've seen really what's going on. So I like baby steps.
Yeah.
Anything to add on that, Angel, at all?
No, it's definitely a learning experience. We have the on-site manager, which is a great help, but at the same time, there's still a lot of work for us. For me, I'm there quite a bit, and
you also have full-time jobs.
Correct.
It's not something that you want to go to 150, 200 doors having full-time jobs doing that. But you guys really know the business right now. That's going well. You think you'd probably be doing 100 doors sometime next year, 100 plus doors?
Yes, our goal is going up to 200 doors if we
200
can.
doors?
Yeah, so that's what we're looking for.
Okay.
Okay.
Great. I'll keep my eye out for
Yes, please do.
Any funny stories that you can think of since you've owned multifamily properties, whether it's management or ownership or building relationships with investors?
I got a funny story. So when me and my family moved down here to Texas, we moved into an apartment complex over off of Pioneer Drive, and we lived there for about 6 months. When I joined the multifamily group 35, 40 years later, we go and visit that apartment complex that one of the other investors owned, and it was just full circle crazy to go back to the same apartment complex that I lived at that I could eventually probably own.
As a kid?
A kid.
So you lived in an apartment complex fairly close to the apartment complexes that you guys own already.
Correct.
Unbelievable. That is funny. That's full circle. Now you go from the tenant to being the landlord.
Right.
How about you, Sven? Anything that you can think of that's funny?
Oh, I don't know anything funny here, but for us was exciting and funny really that the Shelby or Hyacinth Apartments, how it was called before, was really owned. The two previous owners before we purchased were really owned by owners from these mentor groups we mentioned here, and the ones before the last one actually we knew very well, and they actually provided us their books to us. And how they ran the property, and we could actually feed off their experience and how they made it successful, and they were willing to meet with us and open up their books so we can actually see how they ran it and what worked for them, and they were a great asset to us and helped us a lot to duplicate a lot of that stuff. So I thought it was very, very great for us, funny, I don't know.
That's good. Well, Sven and Rebecca are just precision owners. I mean, they know their books inside and out. Thorough recommendation for those guys, and management and ownership. Angel has just done a wonderful job, just starting off as single family, then going to the 11 units, and now 38 doors. And it sounds like you guys will probably do another deal in the next 6 months or so. If somebody wanted to get a hold of you guys, what's probably the best email address to try to do it? Sven, let's start off with you. What's your email address?
Yeah, our email address is DSI4properties@gmail.com.
Okay, one more time, do that again.
And DSI4properties@gmail.com.
Angel, can I have your email address?
Sure. This is a legacy from our single family days, but the easiest email address to remember is buyerlookingforhouses@gmail.com. And that's just 4 spelled out, not the number 4. So buyerlookingforhouses@gmail.com.
All right, fantastic. Sven and Angel, thanks for spending some time in the podcast. We appreciate it. Thank you very much.
Thanks for having us, Paul.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.